Okay. Good morning. We'll talk about Wall Street vision and the Main Street vision because we have people from finance and investors here and their vision about Brazil. So let's start from Gonzalo. Uh, Please introduce yourself and then you can speak a little and then we'll ask questions. Thank you. Good morning. My name is Gonzalo Fernandez Castro. I'm managing director at Partners Group. Partners Group is one of the investors in private markets, one of the largest in the world, together with my colleagues who also allocate capitals from global pockets to everybody. We invest in private equity, in real estate, in private debt, 10, $12 billion a year, with a presence in Latin America since 2001, investing actively in the country. We are the difference, differently from our colleagues. We're a company created by entrepreneurs of a listed company in Switzerland, $15 billion, and our clients are mainly institutional investors around the world, sovereign funds, insurance companies, banks, funds, and pensions. And the first point about the panel is called the Wall Street Vision of Brazil. But in this panel, we'll go further and talk about the Main Street too. Like I said, Partners is a company created originally in Switzerland. My colleagues here are from Canada, Singapore, and other countries. So the view will be broader than Wall Street. Now, just to talk about something more controversial, Brazil isn't obvious for a global investor who's investing. I always laugh when I was listening to the panel. Imagine the complexity of this, of explaining this to a Swiss, to a Canadian, what happens in this country. It's almost impossible to explain. And it's not obvious for many reasons. In the private market, the public shares and short-term instruments, investments, for example, as percentage of investments going to Latin America in private equity, this is 2% of the world, of the whole world. So it's very little. And we have to consider that these capital allocators globally invest euro, dollars, strong currencies like Canada and Singapore. So you have to have some predictability of what's going to happen with the country for a relatively long period of time. And this is not easy right now. It's not easy to be optimistic about Brazil, but it's not easy to say what's going to happen with the country. You have a number of scenarios, like we heard Zaina talk about strange candidates that can be elected president, to more optimistic scenarios. So it isn't easy. And this is the point I'd like to stress before my colleagues continue. Thank you, Francisco. Thank you, panelists. Thank you, AmCham, for organizing the event. I'm Rodolfo Spielmann. I'm Managing Director of CPP Investment Board. Perhaps I should explain a little bit about CPP. We're basically an asset manager. We manage pension plan resources. It's the mandatory social security plan in Canada. 20 years ago, our institution was created, our asset management was created to manage these resources. And it's generated throughout 20 years a surplus that we started to invest in the 90s, and now this has become a global fund of 325 billion Canadian dollars. So our investments are all over the chain, from private equity, public debt, private debt, real estate, infrastructure, etc. Now in Latin America, we're investing $2.5 billion, of which $3 million in Brazil. 90% of our investments are direct investments, especially in equity. where we buy shares, sometimes minority shares, sometimes majority shares, and we influence the company through governance without operating the companies. We always try to have the operator actually do the business. We are here in São Paulo. We have a team here in São Paulo that's growing. Has grown in the last 3 years when we entered this market. So just to give you a quick look about Brazil, and then we'll get deeper with the Q&A and our moderator. Our vision of Brazil is positive for the long term. Why do we start from the long term? Because many of our assets, for example, when we think about a road with tolls or a grid, a power grid, these are investments that need a stable regulatory environment, predictability, no surprises, no changing legislation all the time. So the greater this potential to invest, not only in the public sector, but also this opening for international capital is very interesting for our investments. So this has improved, has been positive, this long-term vision, but we've seen an improvement to this vision in the last years, a significant improvement. And Brazil has institutions that are very solid, very strong. You see this in many areas, and the fight against corruption has been one of them. Obviously, the demographic bonus is about to end, but the demographics are is very interesting here. We see scale here that other countries have less, so we see a mix of factors that make Brazil interesting for the long term. Some factors have been mentioned here that are starting to be addressed through the reforms, like the labor and the social security reforms, and we have the tax reform and political reform to do, and other challenges for the mid-long term, like safety, education, and health as well. Basically, these are my first comments. Thank you, Rodolfo. I'm Matheus Villares. I'm responsible for Temasek in Brazil. I'd like to thank the American Chamber of Commerce for the invitation and the organization. If you don't know, Temasek is an investment company by the Singapore government. We aren't a sovereign fund, that's GIC, but we are another investment pocket in Singapore. Temasek has an interesting history. It's organized as a company with commercial decisions, and despite all its actions belonging to the Singaporean government, it's totally independent from the government, and it takes decisions of investments that are basically commercial decisions based on return. We have a portfolio of about $200 billion, and we're in Brazil. We've been in Brazil for almost 9 years. We got here in 2008 when I joined Temasek, and I have about $1 billion invested here in Brazil, a little over $2 billion in Latin America. We have offices around the world, and in Latin America specifically, we share this coverage with an office in Mexico. The topics of investments that we are looking for around the world are basically transforming economies. The history of Singapore, they've lived this very strongly, so they look for this kind of opportunity. Growing middle class, large and growing middle class, with sectors and places where you have competitive advantages, and also the emergence of new global champions. When you look at these topics, of course, these are top-down topics. When you look at Brazil, Brazil is a relevant country. You find these 4 topics here. And that's why in 2008 we decided to open an office here and start to invest heavily. So we are aware of emerging markets, which doesn't make it easier for us to explain what's happening here, but we are relevant investors in Asia, China, in India, in Southeast Asia, which are not necessarily simple markets with governance and established institutions, such as other economies. So this is the topics we're working with, what Temasek is doing here in Brazil, and our vision about the market. I think in the short term, the rest of the market is very optimistic with the social security and labor reforms. I think everyone is betting on it. It's priced in the market. If it doesn't happen, I think it will be a disaster. Even in Brasilia, I think got this information has got even to Brasilia. The political class understand that they are essential reforms for the short and very short term. When we look further, next year has an important event, the presidential election, and like Zaina said very well, the smaller number of strange candidates, the better for the less volatility and the more of a chance of opening an investment window. And I think in the long run, Brazil has scale. Brazil has a population. It's rich in resources, which can be a bad thing, but we have a relevant population, a large middle class. You have excellent centers, a private sector that's very active, very prepared, even globally, very successful globally. So institutions are very, as we've seen, despite everything that's happening, the country is working. So we see this very positively. Obviously, there are a lot of things still to happen. I think the patient has just left the intensive care. He's now he's not he hasn't left the hospital yet. But you start to have discussions now about opportunities for future investments in the country, structural reforms, the relationship between the state and the citizenship, the social agreement, what you expect from the state or this bureaucracy. We heard about the quantity of labor suits you have in Brazil and all the red tape, and the tax reform also to make easier the number of hours you spend, especially in small companies. I think all of these things, after this emergency, this initial emergency, we start to breathe again and recover. And we'll see more interesting discussions, I think, and we hope the politicians to discuss more interesting things also. This is basically our vision. Thank you. I would like to invite AmCham's invitation for this panel. 30 seconds about JP Morgan, an American bank here in Brazil for about 70 years. It's the fifth operation of the bank worldwide in terms of people and business areas, and also in the total of employees. We have about 1,000 employees in Brazil. So it's the US first, England, Hong Kong, Japan, and Brazil is the fifth country in terms of number of people. This shows the commitment of the bank with Brazil and emerging markets, since we have a very significant operation here with all the wholesale bank products here available here in Brazil. I'll split my talk in two parts. First, I'd like to talk about how we see the financial markets, the Wall Street vision of the country, and then I'll talk about actual economy. Now, to talk about the financial markets vision, I'm going to use information by PwC, information PwC produced in 2007 that said that in 2030, 52% of the world GDP will be in emerging markets, against 28% in the G7. So in terms of financial markets, the emerging markets that's most organized and developed is the Brazilian market. It has a structure of a market structure that's more similar to the Western world, and this is very important for us. So it's strategic for our bank to be very present in Brazil. Of course, this growth of the GDP of emerging markets will come from China. A lot of it will come from China, but we understand that the infrastructure and the market itself is more developed here in Brazil. So Brazil is strategic for us in the mid and long terms, and we have a large operation already here. Now, to the actual real world, the challenges are huge. And this perhaps is the most important agenda for the country to work with. I'll give you some figures that help this discussion, or perhaps to tease you. These figures were used in a presentation by President Maria Silva of BNDES some days ago, and I think they illustrate the size of the challenge that the real economy in Brazil is facing. For example, the position of Brazil in indicators and in the Global Innovation Index data from 2016. Easiness to open a business, 23rd position. Brazil is 23rd. How easy it is to get credit, 84th position. Logistics development position, Brazil's position is 63rd. Infrastructure quality from the World Economic Forum data 2015. Our roads are the worst in the emerging markets, almost together with Argentina. Our railroads are the worst of all emerging markets. Our ports are the worst in all emerging markets, and our air transport together with Argentina are among the worst in terms of conditions in all emerging markets. Expenditures in infrastructure, according to the GDP in 2013, in terms of percentage of the GDP, this is data by McKinsey. China invested annually 8.8%, South Africa 4.7%, Brazil 2.5%. So I'm giving you these figures to bring this discussion. But while we have a very developed structure of financial market here, the other structures, the other conditions of the economy are still far behind. So we see a lot of opportunities for a bank like ours, or investors like yourselves, to participate in this opportunity in the next few years. Thank you. Thank you. The first question about resource allocation, a topic that you've addressed. I have a question here from the audience. When are you going to allocate global resources? Sorry. Yes, when are you going to allocate global resources to Brazil? Allocation of resources in private equity dedicated in Brazil, we already have 3, 4. So for this year, so what factors do you consider to decide on this allocation? The question was particularly about the world of Latin America. We have a methodology that we call relative value, and it starts by a top-down analysis, basically macroeconomic analysis and sectorial analysis. And we classify the world every 6 months in this relative value, and we score it with flags, red, yellow, green, and we try to create bottom-up opportunities, and we see this match. It's not always perfect, but this relative value view of the world is what we use as a tool. In our case, we have allocation. We have 3% approximately of our fund here in Latin America, 1% in Brazil alone. So if you compare this with the GDP of Latin America, it's something like 6 or 7% of the world GDP. In Brazil, slightly half of this. So it means that we have huge potential in terms of GDP. And in our case, we don't have allocation and dedicated resources. We want to generate alpha, so we look for opportunities where we can generate alpha, no matter where. A focus on emerging markets, apart from Latin America, these are India and China, and we're focusing on them. Of course, we could double the resources in Brazil as we find good opportunities to generate alpha to our clients here. And just like in other markets, there's no limit to this. We have the same level of resources invested in Chile and in Brazil, but the economy of Brazil is 10 times larger. So it's not because of a lack of resources or availability of investments. It's really a question of opportunities. In our case, well, ours is a similar case. We tend to look at specific investments, bottom-up approach. We have one investment committee only, and so when we look at investments in Brazil, we compete for capital with investments from all over the world. And what we're looking for is a spread over a capital cost. The larger this spread, the larger the chance to approve an investment. Temasek, every year, we don't have new investments. For a new investment, we either sell something from our portfolio or we get it from the dividends of the companies we invest in, which of this 200 billion portfolio, depending on the years, like 10, 20 billions invested and disinvested a year. But this is guided by the type of return, and this spread above the capital cost. As we have opportunities in Brazil for growth, and as we have the conditions improving in Brazil, the cost and the spread of the debt being reduced, more stability, more predictability, this obviously helps. Again, investment to investment is it's not a global thing. We have no global allocation, but if risks go down and if there are opportunities for investment with growth and return, this will naturally lead us to a greater presence in the country. Now, coming back to you, looking at the reforms, ongoing reforms, and the economic recovery, what are the opportunities for investment that you think are the best for the next months and years here in Brazil? I like the infrastructure sector. I think there are a lot of opportunities. Like I said before, it's a huge need. There's a huge need for investment in infrastructure. I think consumption will recover in the next 2 years. I think the market related to consumers will offer good opportunities. I see good opportunities in insurance and banks, and these are the sectors I like best. I think the real estate market will normalize also with good opportunities and a healthy fashion. So I think there will be a lot of opportunities choosing the best player, the best positioned player with good governance. I'm sure we will have good opportunities. And about logistics, do we have a solution for that? Yes, there are a number of solutions for logistics. We have to start working. We have evolved in some respects. For example, we're not afraid to offer investors return anymore. The last operators in auctions were at market value, market return value. So I think there's a lot of opportunity, there's a lot to do, but of course we depend on unblocking this process of concessions and PPP so that capital can be invested in these sectors.
Agora voltando para os investidores, mas ficando ainda no mundo macroeconômico.
But still talking about the macroeconomic world. Considering all the macroeconomic conditions in Brazil today, how much time do you expect if you make a public-private investment right now? How do you see the return of investment of your initiatives in Brazil now in comparison with other countries? Is it the same? Is it different? In our case, we have been making investments, even with a bearish market. With our partners in Singapore, we always try to convince them that there are opportunities. And even in the past 3 or 4 years, when the macro was very compromised, we have a history of fantastic investments in healthcare, financial sector, education, regardless of the macro scenario. So we are always trying to detach from the macro, because despite the macro, in specific opportunities can be very interesting. Of course, that with a deteriorated macroeconomic scenario, although you can say that it's easy to buy when you have a bearish market, it's very difficult to persuade people to invest, because you don't know what the risk is. You don't know what can happen. You don't know when this crisis is going to end. However, in our case, we always try to detach from the macro, to separate the macro from specific opportunities, and we have a lot of opportunities. We have been investing a lot in the past years and the past months in Brazil, despite all the macro volatility. In our case, what we need to do is to be the benchmark. And we have the opportunity to invest through a mix of equity and debt. Otherwise, that is why it's so important to generate this extra alpha. Otherwise, we would not be able to justify the active investment. And in this case, it's also complicated, because if you have a high volatility in your markets or the currency, if you have a very high interest rate, this is also complicated, because it will increase your benchmark. So we have an upward trend, we have a positive trend with the stabilization of the currency rate, and the real interest rate is dropping, the inflation is dropping, and these are all factors that help investments and will help the return of investments in Brazil to be interesting. The combination of the political view, the macro view, de-risking, and some of the variables, the reforms, are helping create a good environment for investments in the long term. We can talk about some specific cases, and you remember what we said, that we invest with this relative value view. So at about 2009, 2010, we were investing in Brazil. We took part in the IPO of Arcos Dourados, McDonald's, and we made 9 times our money in dollars. In Technos, 3 times what we invested in dollars. But people who bought an apartment at that time also tripled their investments, right? We also have a central investment committee, so we come up with a project to invest in a certain sector of the industry. Then our colleague would create a project to invest in Vietnam or China, and the foreign risk was always better than Brazil's. But then when the situation improved, we put Brazil as a yellow color, because it wasn't really the moment to invest. We went back to investing in Brazil recently. We perhaps did not start at the exact right moment. We still had a downward trend at the time, so some of our investments suffered in the beginning, but they will give us good returns, because we are using the right plans, the right talents. And even in the worst case scenario, in the worst moment of the economy, since we invest in dollars and the perceived risk in foreign countries was very high, someone could be asking for 20-25% in dollars for a risk of the investment in Brazil. And if you put the cost of the hedge, and we have a very cautious policy, so it was another 10%, and you're talking about expected returns of 35% in reals, and there's nothing like that in the economy. Then with the drop in interest rates and the drop in the perceived risk, that's where the shift happened, and it allowed us to compete in that supermarket of opportunity, like Rafael said, the supermarket of opportunity, and all the other places in the world went back to being attractive to us. I'd just like to add something to what Gonzalo said. From the macro perspective, at least for us, perhaps the most important variable is the exchange rate. In 2008 until 2013-14, most of our investments were in companies and industries where you had a natural hedge, either exporting companies that have revenues in dollars or somehow connected to an exporting industry, because at the time the exchange rate was overvalued. The real was very strong at the time. But in the past year, with the devaluation of the local currency, this makes us more comfortable to invest in local thesis, in where you have a certain level of growth, but you're paying in reals. So this ends up changing this risk ratio in relation with the return of our investments, because I think that for some of you also it's important to have a return in a strong currency. The next question is whether Trump's economic policy, whether President Trump's policy will bring more capital to emerging countries, and particularly to Brazil, or is the impact going to be negative? Let's start with José. I'd rather approach this issue the following way. Let's do our homework, let's fix our economy, let's fix our labor market and the social security, and resources will naturally come. Of course, we'll have more resources coming if the global market is calm, and fewer resources coming if there's more volatility. I honestly think that we have to turn our efforts inwards and do what we have to do here in our country. We had a very good cycle in the past 15 years, or specifically between 2002 and 2009, 2010. Of course, the 2008 crisis was a delicate moment, but still we had a good period. The winds were favorable, so the commodities prices ended up having a huge impact on our economy, and then we just went to a comfort zone at the time, and we didn't do what we needed to do in our country. So now we should turn inwards and fix our country first, and then I think that the wave of investments will come naturally. If there is global volatility for any reason, either political or economic, if we have done our homework, if we are fit as a country, we will benefit from that and attract the resources. So I don't really have an opinion on Trump's policy. Actually, I probably know as much as you know because I read it from the newspapers and the reports. But I think that what we should do is focus on fixing our economy and doing our homework and fixing what we need to fix inside our country. Anyone else? Or should we move on to the next question? Very briefly, in the other panel and also yesterday's dinner, we heard that we have many global risk factors right now, not just Trump's policy. And I think the first thing is that Latin America doesn't seem to be very relevant for President Trump. So I don't think this new policy will have will not have Latin America in mind. But of course, we have some potential risks in the horizon of our investments. In a 10-year horizon, we have things like war aspects, geopolitical factors, the American interest rate, Venezuela, and the risk of a civil war. And with all these factors, and specifically the higher interest rates in the US, emerging markets will suffer. But it's very difficult to predict what will happen. That is why it's important to work with different scenarios more than just one single forecast of what will happen in the future. The discussion about the return of investments has raised many questions. So let's go back to that topic. What everybody wants to know is that, first, if you have a specific timeline for your investments, how long are you going to invest, for how many years before you get your returns? And the second specific question here is whether you have a risk premium for Brazil when you invest here. What premium risk do you consider? And finally, what is the expected return of investments in Brazil in general? Matheus, you can go first. You want numbers, right? Not me, they want numbers. We have a capital cost that varies not by country, but by specific investment. So we have an entire department in Temasek that looks at a specific sector, a specific geography, or a specific investment to identify the capital costs that we need in case of an investment. So we don't have a global number, a general number, regardless of the industry. But there is a number that everybody in Temasek knows. And since Temasek's foundation is 74, so for 43 years, the average return of our portfolio is between 16 and 17% in dollars. And everybody in Temasek knows this number. And of course, we're seeking even higher numbers in leveraged sectors, always numbers above this average. In more stable sectors where we have longer term contracts, then we can even consider lower returns. But this is more or less the benchmark that we use. Our return at the global level, we have a real return of, we need a real return of 4% to make ends meet. But of course, we're looking at higher. We're looking for higher returns. In Latin America, our average return has been 12% historically, and this is how we create a certain buffer to either decrease contributions or increase benefits. Specifically for Brazil, of course, it depends on the type of asset, but we are looking for returns in real. Actually, in each country, our benchmark is real and not dollars. And it could be in the mid-20s for private equity. But it will depend on the type of it, whether it is a defensive asset or volatile asset, or the type of industry. High-tech is very volatile. It could be conservative industry. So there are many factors involved. But these are the guidelines that we follow. And also the exchange rate, as they were mentioning. We always try to diversify our currencies. Today, the portfolio invested in Canada is about 15-16% of the fund, and the rest is outside Canada. Because of the size and also because of hedging of the returns. Canada has also been suffering with the drop in commodities prices. And having invested outside Canada has been helping our returns and help us made a currency hedge. And of course, this includes Brazil. So this is our diversification strategy. Maybe one year we will make billions with appreciation of currencies, and in other years we can lose. So over the medium to long term, it nets itself out. But we need to be very flexible to accept losses and gains with the exchange rate variations. The hedge could have a huge cost every year, 85% was in Canada, and it would never pay off. For us, the minimum return, we don't have a minimum return for Brazil. Our measure is the market share of our customers. So we look at our customers, and what we want is to grow their market share. This is the return that we expect, is the growth in our customers' market share.
Gonzalo, você ia comentar do prazo.
Sim, não, que não foi falado do prazo.
Yes, you didn't say anything about the time. Of course, your capital has to be more patient because you're talking about longer-term investments. The government and the pension funds, we're looking at a 30-year horizon. For private equity, it is different. The times are shorter. We're talking about 4 to 8 years for our investments. And the return, certainly, it is a risk-return equation. So when you talk about private debt in the U.S., you go from a senior debt of 4% in dollars up to 10, 12%, depending on the risk you take. In infrastructure, it could be between 8 and 12%. Private equity in the U.S., we would be talking between 18, 22% right now. So how can we transfer these returns to Brazil? But it's difficult. It's not easy because a private equity deal in the U.S. usually has a lot of debt. So you buy a company with 6 times its EBITDA in debt. How can you compare that with a company with very little leverage in Brazil? It's not very simple to calculate that. I tend to think that even with more leverage outside, you still need to have a premium in Brazil. And also because of the lack of growth. If you look at a market like India, which is still delivering 7% in its economy and possibly 15% in some of the companies that are doing really well, or even China, we have investments that are growing 20, 25% compounding every year. So of course there should be a premium because we don't see that in Brazil right now. So there's a valuation premium, the opposite, right? So here in Brazil, I think we should be thinking of returns of about 30% in reals for private equity, high-risk investments. Of course, it's less for infrastructure, but for companies, if you consider the country risk and the exchange risk, that's what you should be looking for, about 30%. You talked about infrastructure, José. Is there any foreign appetite for the Ferroground Railway project if it is approved in the second half of this year? My honest answer is I don't know. I am not involved with that project and I am not a specialist in railways. So I can't really answer your question. I apologize. I think if the project is well structured with the adequate return rates, investors will come. It is an important railway for the country. However, I don't know enough details to give an opinion. Matheus, you work with infrastructure. Do you have an opinion? Our experience shows that if it is a well-structured project, and I second my colleague, I don't know the details of the project, but if it is a well-structured project and if it generates potential return to the investors, I think it won't be a problem. And it's important to have a very well-established regulatory framework, and it needs to be stable. Actually, for anything in infrastructure, this is very important. For example, that change that was done in the electricity sector in 2012 or the oil sector in 2010 created huge uncertainty. So when you a huge uncertainty when you present investment opportunities to your committee. Recently, we invested in energy transmission, and one of the first questions of the committee was, well, you said the system is stable, but what happened when that shift occurred in 2012 or 2010? So this is the major concern. If you have a very well-established regulatory framework, because the risks are very high in Brazil. The risk, environmental licensing is a huge risk in Brazil. Construction itself is complicated, and you have to consider all that and bring the appropriate investors. But you should have an auctioning structure that considers all that. In 2012, 2013, there were the concessions of ports where investors would bear all the risks, commercial risks, construction risks, environmental licensing risks, and there was a cap in their return. And for any investor, for any serious investor, that is just not possible. That is just not viable. And in the end, you would end up attracting investors that would not be interesting for your purposes. And I think this administration, the current government, is thinking the right way. We see what they did with the airports. I think they are good. I think the prospects are good. I don't know specific details and potential demand or cash generation, but this is a very important project for the country. Well, I also cannot give you an opinion about the specific case, but when you talk about railways, you need a very good infrastructure plan. We have a lot of investments in infrastructure. We have investments in Peru, Mexico, Chile, but not in Brazil, not in infrastructure. We have other types of investments here. We still need a clear and predictable regulatory environment. The past history has a certain weight, but we need a future commitment to have independent regulatory agencies, a predictable regulatory framework. We need predictability. In some countries, we don't even have to talk about predictability because it's just stated in their constitution and it never changes. We need this level of confidence, and we also need to have scale projects. In Brazil, we have many, of course, but we need to create a pipeline. It couldn't just be one auction a year. We need to have a pipeline in different sectors. We need to have an organized infrastructure program organized by the government and the ministries. And we need to have an initial monitoring of the government for the greenfield projects, because we have all the problems with environmental licensing, and we still need the help of the government to facilitate the start of the process. But this is a very important area with huge opportunities, and of course it creates a lot of appetite for foreign investors. And the exchange rate is a risk in infrastructure investments? That's a great question. Of course, in Brazil, traditionally, not just capital, but also debt, historically, we have always had, and more recently even more, an importance of local banks and the National Development Bank in funding these projects. And differently from other countries, in Brazil, the rates are in local currency, because in many other countries, the energy costs, transportation costs, they're all linked to contracts in dollar, but here the contracts are in reals plus inflation. This creates a mismatch between the exchange rate and the return in the local currency, which is important to be factored in and solved. In the long term, this correction with inflation, and several analyses have shown that in the medium term, you end up having a good compensation. But this depends a lot on the initial exchange rate. If it is too overvalued, you will never be able to catch up, even with longer terms. But of course, this point needs to be discussed. We have some interesting proposals, some people thinking about this subject in the Development Bank, the Central Bank, and the Finance Ministry about this mismatch that could be very relevant depending on the sector. Especially for foreign investors, this is extremely critical. My opinion, we have two issues related with hedge. One is investments in equity, and the specialists have already said that how they work with this type of risk. And usually it's very expensive to hedge equities for 5-10 years. And I believe that you end up considering a premium to cover this risk. And you have leverage. Indebtedness, the debt, and the funding capacity of the national financial system, their capacity to provide long-term resources for a project. And this is very limited, especially now that the Development Bank does not have the capacity it had in the past. That's why you need foreign investments. This discussion of this money that comes for leveraging and the hedge, and we know that this is being discussed in Brasilia with the government, but I tend to prefer a model of a premium that could cover this risk. So the internal return rate of the project with some of the leveraging dollars should cover the hedge risk. I think this would be a simpler structure. I don't know how the IRS or the Development Bank, of course they have the structure, but this would be much more complex and would require discussions with other bodies of the government. So in my opinion, you should just let your return rate increase so that the project can accommodate your projected evaluation if you were working with dollars. Still about infrastructure. Are you more focused on greenfield, brownfield? Is there any difference? Do you consider both? Well, typically we focus more on brownfield. But in order to invest in Brazil, you need to be very creative. So one of the investments that we made here in infrastructure that is ongoing right now is that we're building totally greenfield a submarine data cable from New York to São Paulo, and it's going to be the fastest and the best latency cable between New York and São Paulo. So this is a way of investing in infrastructure connected with the demographic reality of Brazil and without the influence of the government. So this is a very creative example of an investment that we're making in Brazil, greenfield. And because of all the problems that we had with infrastructure in Brazil, looking at Brazil as a classic infrastructure play, which is what you have in foreign countries with a lower risk, a regulated return, here we are almost considering it from the perspective of private equity, with a premium and taking all the risks within the expected return. And sometimes the expected return may seem high, but it is high because it not always works. We lose a lot of money, but in average, the return is acceptable.
So greenfield and brownfield is a very tactical factor. You need a lot of creativity to invest like that. Like I said before, default is brownfield. We aren't good in assessing the probability of foreclosure, of whether an environmental license will be granted. So this period of time can be very bad for investors. So you have builders, construction companies that do this much better. And we invest once this is done and the plan is executed. Once there are no execution risks and timing risks. That's brown. And the return can be smaller, but smaller risks compensates for that. We focus on return, really. So we have some difficulty to do projects that are already mature. We tend to look at brownfield, like Rodolfo, something that already has some cash generation and is expanding or something. And like Gonzalo said, we have to be creative. So we invested, for example, in waterways in Brazil together with, it was totally greenfield. It was a PowerPoint we invested at the time, and the company managed to implement the plans successfully. We have a lot of flexibility of how we can allocate the capital, but purely greenfield for us is also problematic because we have a capital base where we need, for new investments, we need to disinvest. The preference is assets that already generate cash because you can get a shorter cycle and recycle this capital, and also assets that pay dividends that can generate cash flow for new investments. And on infrastructure, finally, for you, José, the cost of financing these projects, leveraging them, will be higher, and the BNDES cannot continue, as it were. So, how can you close this equation of between the cost of construction and the financial cost so that the projects can carry on? Well, to my mind, it's very simple. When you have a subsidized fee by a public bank, the whole society is paying for those users who will, for example, use that road. So the toll is cheaper there. So the vehicles that are on that road pay less tax, and the society as a whole pay this cost. I don't think it's fair. I prefer a model where the money comes at market price, toll has market price, and only the users of that road pay for that. So the cost has to be embedded. The market cost should be embedded in the internal return margin so that you would have capacity for funding. Second, the capacity, like I said in the previous question, the national financial system has no long-term funding, some exceptions, but there's not enough volume for the pipeline of projects that we have. So naturally, the option would be the international market. And again, we talk about the adequate cost to fit in the internal return margin to include the cost of the debt and the liabilities, financial liabilities, instruments of short-term financial fiscal exemption. You have why should I carry on with these things? The premium is very low and there's no liquidity, so there's a lot of difficulty to leverage the liabilities, financial liabilities, and we have to turn to the international market. Okay, and now the last one. How do you deal with the fact that many construction companies, which are necessary for infrastructure, are involved in the famous corruption scandals? Will this be a problem? Do you have a solution for this? Well, our opinion is this vacuum will be filled. We have enough expertise worldwide. It's just a question of bringing other companies, and even in Brazil you have smaller companies that are outside these cases. So if the project is good and if you have the opportunity, the market will naturally fill this vacuum. Like Berenguer said, this change of paradigm of having less state, less subsidies towards a system where the market prices really guide the sector. I think this is very welcome. It may be hard at first, but it's welcome. and it happens with companies involved in the car wash operation, Lava Jato. In the it may be painful, but in the long term, I think it will be positive. The last auctions shows that there is very much a lot of international interest, whether in airports or roads and state roads. So this vacuum will be filled by operators who will bring their own contractors, their own construction companies that can be from here or other countries. So personally, I'm not so worried about that. I think the benefit of this fight of having clearer rules, clearer partnerships is the benefits are much greater of having these. The benefits of having this outside of the auctions and everything is much greater than any difficulty in the short term. Gustavo, Gonzalo, to you again. Candidates and investments. How important are governance, transparency practices, and maturity of executives? In your opinion, the position of the company when you're investing, when you're assessing an investment? Well, there are some governance and transparency practices, and you cannot start them if you don't have governance and transparency. You can't even think about investing if you don't have that. Here in Brazil, we screened and we tried to remove the red flags from our investments. So we do this screening, and sometimes some companies go red very quickly. It's very interesting company, the opportunity is very interesting, but it's impossible to invest there. Now, in Brazil, you have to accept the different level of maturity of the companies compared to the European and US markets. You have to accept that the directors will be changed, will be modified. It's very rare to find an investment where you don't have to do deep transformation work. This doesn't happen abroad. You have investments, private markets, that is basically a counselor work. So the largest companies are involved here in Brazil, and this fact is very tricky. So investments in emerging markets are necessary and they need support. And we are, with our international practices, we can bring best practices from abroad to benefit the portfolio here. So we have to accept that there will be gaps in the operative and managerial side. Rodolfo, the financial situation of states and municipalities. Has it enabled or influenced some project by you guys? Not specifically. At a macro level, at a level of fiscal discipline, it's very important that the states and the municipalities are observing the law of fiscal responsibility, etc. So in this respect, some states are more problematic than others, and they have to reform. They have to work with, like a company, they have to do the accounts, cut costs. Increasing the revenue is more complicated, basically reducing costs from state governments. So I think we need to accelerate this too, because it brings an expectation of fiscal balance, not only municipalities, but also states. Specifically when we affect, investments are not affected, but it doesn't mean it's not important. It's fundamental that the law of fiscal responsibility is met at all levels of government. Okay. We only have question for one more question, although I have 10 questions here in my hand, so I'll pick one randomly. I read, I don't know if you do, but I heard about some joint venture projects in Brazil. Joint venture management in Brazil, is it worse, better, or just like elsewhere in the world? What's your experience in managing joint ventures in Brazil? It's somebody saying here you have more experience. I don't know.
Eu posso falar
I can I can tell you about the problematic of emerging markets. It's not exclusive to Brazil. When you're investing with a minority position, typically in the US, the asset, they're, the asset doesn't. Here you can prefer to be a king rather than rich. I don't know if I'm explaining myself well. We understand this as a partnership, right? Typically, when we invest, we're not running the business. We're financial investors. We start with the board, a management team, and ideally a shareholder that could be the founding family that also participates sharing the company in the long term. So these decisions are really many times of partnerships with a holder that has the same long-term vision as we do. This can be management, professional management, but it's important to have partnerships with people who know the business much better than you, because we're investors in all sectors and we really need people who know how to run the business and very experienced in it. So we work in this kind of partnerships very well with long-term investors, and these partnerships can be strategic but also financial. We have a similar situation with what Rodolfo is saying, the minority case. What we look for when we invest is to protect minority shareholders, and in Brazil this is relatively well established. If you compare to other emerging markets, I think Brazil is even better in this respect. But there's something else. The chambers of arbitrage, which were created recently, really helped the process and made it more efficient. Okay, I think this is the end of our panel. So thank you, everybody. And now I'll forward the questions to them. And if you want to talk to them directly, you can meet them at the corridor later. Thank you.